Welcome to the Sharon Partners quarterly market update for June 2025 and the end of a financial year. I'm joined as always by Dr. Steve Garth. Steve, thanks for joining us.
Yeah, thank you, Kim.
And Steve, what a quarter it was. It was on again, off again, tariffs, up and down. There was quite a bit happening. How did that play out in the Australian market?
Yes, well, certainly at the start of the quarter, Kim, there was a huge drop in markets around the world. They fell by about 10%, and that's when Trump announced the tariffs to friends and foe alike, much greater than what anyone was expecting. And you can see on the chart there that big dip on the 2nd of April. But a week later, Trump decided that he's put all this on hold and he paused the tariffs. In fact, they're just coming off in the next few days. But you can see that the markets, once the tariffs were paused, took off. And so what you're seeing there in Australia could kind of replicate in every other market around the world. Markets have just taken off since that time. So for Australia, not only a sensational quarter, but for the whole financial year, it's 13.8%, way higher than the average return on financial years.
And Steve, we don't normally discuss specific stocks, but were there any particular standouts in the Australian market?
Well, I think in this quarter it is worth mentioning CBA, and I'm sure most of the audience may have heard already in the news that CBA is just going up and up and up. It's up like 50% for the last 12 months. And here's the thing, nobody knows why. None of the analysts or brokers could tell you why CBA is up that much, but it is. So on the chart I've got here, I'm showing Australia's two biggest sectors, financials, which of course CBA is the biggest part of that, just up. Overall, financials up 30%, really driving the ASX 200. But on the other side, you'll see that materials, and that's our big miners, that's negative. And that's because BHP is minus 10%, Rio is minus 6%. And this time we do know why they're negative. It's because their prices are closely related to what's going on with the iron ore price. And the biggest consumer of Australia's iron ore is the Chinese and the property market in China. And that is in a hole, has been for a while, and shows no sign of getting out of that hole. So it's really depressing the stock market prices of our miners.
And Steve, leaving the Australian markets behind for a moment, what can you tell us about the international markets over the last quarter?
So an even stronger story in international markets. The quarter not as strong in general. You can see there the developed markets on the left-hand side of the chart, up 6 and bit percent. But overall, for the financial year, the developed markets are up 18.5%. That's an amazing return over 12 months. Now, Kim, normally in the last couple of years, you and I have talked about how the US has been driving that return. But this time the returns are much more evenly based, not only in the US, but you can see in the chart there, Europe's actually got a stronger return than the US has. And also the emerging markets, which have been a bit of a laggard over the last couple of years, they're up 17.5%. So altogether, a diversified portfolio of Australian and international shares has had a phenomenal return for the financial year.
Okay, and now over to interest rates, which is an important thing we always have a chat about.
Yeah, absolutely. Well, we're recording this today after the RBA left interest rates on hold. And in fact, 2 weeks ago, the Federal Reserve in the US left interest rates on hold. So here's the thing. Central banks and bond yields, I'm going to show you bond yields in a moment, are sort of caught between two things. On the one hand, things like tariffs can be inflationary. In other words, they can add to the cost of living for Americans, and that means interest rates will have to go up. But on the other hand, because the cost of living goes up, it could also slow the economy, and in that case, interest rates need to go down. Now, Australia's got different forces, but it's much the same of a play between two different things happening. And you can see that when we look at the yields here. So yields are sort of the market's prediction of where interest rates are going. So the good news is, over the course of the year, then those longer yields have been coming down. When yields go down, bond prices go up. But it's certainly not a smooth ride, as you can see there. But overall, Kim, because interest rates have come down and because yields have been coming down, then the global bonds are up about 5.8% for the financial year, and Australian bonds, even better, up 6.5% for the financial year. So they're really good returns in bonds. Couple that with great returns in equities, And all in all, it's been a happy financial year.
It certainly has. I mean, we've had a really interesting quarter, but as you said, overall, we've had a great financial year. And as always, at Sharon Partners, our investment philosophy is that you just can't predict what comes next. And the important thing to do is maintain a disciplined approach and a diversified portfolio. Steve, thanks so much for joining us. We look forward to your next quarterly market update.
Thanks, Kim.